longest to get going on these. Not sure why that would be, but yeah, everything kind of does that. So it appears that we're live. And hey, everyone, thanks again for tuning in. This is Dash Podcast. I'm joined by the illustrious, awesome Ryan Taylor, CEO of the Dash Core team. I'm going to hit you with the intro graphic, and then we'll get going. So, hey everyone, and Ryan came on here today to basically address this interesting topic of tokenomics, which is, it's funny that term has been, some people have objected to it as wanting to call it economics, but whatever. I would consider economics being able to affect, say, the incentive structures of miners and masternodes to just run the network. Some people have objected not to necessarily it as wanting to call it the value of the thing itself. But anyway, back in December, there was the open house at the Dash Core Group offices in Phoenix, or Scottsdale more specifically, and you basically outlined that there's a problem, with the Dash system the way it's created right now that could, basically there's some calibrations that could lead the market value to go up and down, more importantly, a little more dramatically than otherwise could. And basically we could tweak some things. So here we are several months later, like I guess half a year later, and we got a proposal, an actual, basically a well thought out solution to some of these problems. And so you outlined that yesterday on a live call, and it seems like everyone pretty much, there was a quick informal poll on Discord like an hour ago, and it was like almost everyone seemed to favor that approach. There was a couple people who thought that maybe something more aggressive would be better, but for the most part, it seems like everyone likes what you came up with. So now we have a big list, well, not big, but we have a list of stuff to talk about regarding that. And so, of course, I emailed you ahead of time to just so you could be prepared for a lot of these things. But I'm just going to, so basically, from my recollection, and of course, probably the recollection of a lot of people, the presentation in December seemed to be rather, depends on your perspective, but a little bit grim. Like it seemed like, wow, we have a serious problem with Dash. It's going to die if we don't change it. We need to radically do stuff. We need to potentially eliminate proof of work mining entirely. That was, of course, one of the options on the table. It wasn't proposed, but it was like a few different things.
It was the most extreme example, and I tried to make it clear that this does not mean we're going in that direction, but I was laying out the potential range from do nothing to something as extreme as abandoning proof of work. And I did put that in part to illustrate kind of the most extreme example that we could come up with of the impact that it could have.
Yeah, and so now it seems like this proposal is extremely modest, I would say, compared to that. And obviously there's a lot of in between, but it seems like a very small, incremental is always good, but it seems like it was a very small change. So what changed since then, if anything, or did you learn more about stuff? Like what makes this picture now completely, to a lot of people, completely different now and not nearly as extreme as it might have seemed before?
Well, I think the first thing is, what state were we in back in December? As far as our level of understanding. Our level of understanding is that we had kind of analyzed some preliminary data. We hadn't done it in a statistically significant way, but we've done it in a way that told a clear story.
Okay.
And we had some hypotheses that needed to be tested. One of those was that the ROI of operating a masternode may have, at that point in time, kind of stopped declining. It certainly appeared to be. And if that was the case, it pointed to a pretty dire scenario. In the preceding or in the subsequent months, we've done a few things. One, we've analyzed the feasibility of a range of options, eliminated a large number of those. And two, we got, and most importantly, I think, is we got a much deeper understanding of how our system works in reaction to incentives. And the result of that research is that the assumptions that we were making back in December are unlikely to play out. It seems like the data points to the fact that the masternodes are not strictly looking at ROI. They do take into account, at least to an extent, the emission of new coins. And so if there is a change in the emission rate, which there is every year, that is taken into account. And so when we remodeled this with a greater level of understanding of how the network would likely react going forward, it led to an understanding that this problem probably isn't as severe as we thought that it was back in December. And that, of course, is good news. It means that some of the more extreme scenarios that we were considering simply weren't needed. And I think our philosophy all along has been, is there a way we can do this with the least risk possible? Because what we have learned from the past is that tinkering with these things can have some unintended consequences. And so to the extent that you can address the issue with the least amount of tinkering, that's probably the best path forward in terms of managing risk.
Yeah, I mean, that makes sense. The whole ain't broke, don't fix it, but also, you never know what's going to happen if you do a big change. Now, one thing I've noticed is the reward reallocation. What the final one was between, excluding the treasury, of course, from 50-50 to 60-40. Was that right?
Yeah, excluding the treasury or proposal system funding, it was a shift from 50-50 to 60-40.
Yeah, and so do you really think that small, relatively small change, especially since it's over a long period of time, is it really enough to cause some sort of meaningful difference in Dash's valuation?
Well, I think that the goal isn't necessarily to stabilize the valuation so much as it is to stabilize the growth rate in the circulating supply. And so you just can't have a high growth rate in circulating supply and expect the price to maintain. One of the most extreme examples of this, by the way, is when Zcash launched. It launched with virtually no coins being emitted, and it slowly ramped up over time. And you saw the price drop by 99.999% or something crazy. Anybody that was purchasing coins that early in the process, really was setting themselves up for not a good outcome.
Yeah, especially in BTC terms. I remember several Bitcoin for a single Zcash in the early days.
Yeah,
that was crazy.
And so it's really tough to maintain your price if the growth rate in the circulating supply is high. And because of our masternode system, the rate at which our circulating supply grows is different than the rate at which total coin supply grows. And so I think that it's really difficult to get that right in such a system. I think that, the changes that were made back in 2014, 2015, they were pretty aggressive, and they led to a reduction in the number of coins circulating which set us up for 2017. But it wasn't sustainable. We've seen this in several iterations throughout our history where we made a dramatic change like we did back in, say, May of 2014. The price spiked. It went up, 1,500% or something, and then it crashed immediately after that. We learned from that when we did the change that we made in 2014, 2015. That was more gradual. I'd say that it was still quite aggressive. And so you asked the question, can modest changes have a significant impact in the price? And the answer is yes. We've seen that on several occasions. What we're trying to do differently this time is we're trying not to cause that spike, but provide a kind of take the edge off of our growth rates in the near term that seem to be having a depressing effect on our price. And so, I think that this is about managing that growth rate in a more sustainable way without going overboard.
Yeah, that makes sense. Now, as far as the going overboard thing, what about a less modest proposal? Like, what would be some of the effects if, say, instead of just like a simple small reallocate, like a 10% shift, if it was bigger than that? Is this slide time, by the way?
This is slide time. So,
okay.
If anticipating some of these questions, I put together some different scenarios just to help illustrate the dynamics that are at play when you make changes to either the allocation size or the aggressiveness with which that allocation rolls out.
Yeah.
So if you pull up the slides here, what I've done is I've put together some scenarios where we make more modest changes all the way through to more aggressive changes. So what you see here is what would the circulating supply growth rate be each year if we were to do a simple 5% reallocation and try to keep that relatively level. You'll notice there's a little bit of noise in here. I did my best to kind of create a scenario where it's pretty smooth. But just to give you an idea, this does take the edge off. It lowers the growth rate, the peak growth rate going forward on an annualized basis from about 12.5% down to, say, about 9%. And it kind of holds it there for the next few years. That's still pretty high. And in my opinion, we probably need to do more than 5%. If you flip to the next slide, you can see the effect of this is the actual proposal. And what it does is it brings the annual circulating supply growth down below 8% for all future periods. And so now we're in the 7-point-something range. What it does is on the right-hand side, you can see that it actually balloons some of that growth rate out into future periods. This is why I call this whole strategy flattening the curve.
Yeah, we're very, very familiar with that term these days.
Yeah, and so it does push it out. It doesn't necessarily change our overall supply. It just pushes it out as it enters the market at a slower rate when you consider the effects of masternodes and the creation of masternodes that a higher incentive would result in. And then if you do this further and go to 15%, well, it pushes that bubble out even more. It does extend the benefit out past 2025 into future periods, all the way out to, I think it's mid-2027 or something at this point. But what you're having to do as you push this bubble down further and further is, you have to lower it a greater percentage, and you've got to push it out further and further into the future. And the result is that you get less and less bang for your buck as you keep doing a reallocation of 5%, 5 more percent, 5 more percent. And you can never push it down to zero. It just, you're just pushing this bubble further and further out and flattening it out over a longer and longer period of time. And so you get a lot of benefit out of 5%, a little bit more out of 10, and as you start getting further and further down in the reallocation, the benefit starts to go away.
Yeah,
I've also been asked the question.
That trough there is pretty interesting. You would just crash all of a sudden, perhaps create a spike in the price of Dash, but then again, it looks like then you start having another collapse later, another depression era. So yeah, that doesn't look attractive at all.
Yeah, and so people have asked, can't you take the 10% and do it quicker? And the answer is sure, you can do that. It would really reduce the growth rate in circulating supply for the next couple of years. That would have a more dramatic effect in 2020, 2021, and 2022. However, after that period ends, in this scenario, I did it over 10 quarters, just to take an example. And what happens is two things. One, because the circulating supply is growing slowly, it doesn't change much over the next 2 years. We're still dealing with a low base. We're just dealing with it 2 years from now. And so there is some benefit here. You do manage to reduce the peak in the immediate term, but you kind of kick the can down the road, and you're going to face a similar issue of a high growth rate in circulating supply now in 2023 instead of today. And so there is benefit in doing something like this, but if you don't manage it well, what can happen is you can overreact in the short term, and that causes an issue just years from now.
Yeah.
If we want something truly sustainable, we need to kind of manage this in a very predictable way. I have one more example, which is, can't we just do this all at once? Do the 60-40 split immediately? Well, that would cause a lot of demand for new masternodes. There'd be a much higher ROI of operating a masternode, and that would likely cause a spike in investment. We'd see a spike in price. But this is an even more extreme example of that previous slide, where you're just delaying the hangover, basically. And so this has been a very thoughtful allocation. The ratcheting, the kind of ratcheting down of the reward reallocation over a long period of time is very intentional. It's meant to manage that growth rate to the lowest number we can achieve, or the lowest peak number that we can achieve from now until the end of time. And so we don't want to cause these spikes later by decreasing the supply today. In this example, you actually decrease the circulating supply. Well, that leads to a greater problem next year.
Yeah.
And so these are all scenarios we played out. We thought about these things. If we do want to do more than 10%, we certainly can. But it would have less effect than the first 10% would, and it would lower the circulating supply growth a little bit more. We could probably get it down to, the low sevens instead of the mid sevens. But you do start to run into some limits here in terms of what you can do. The other thing to consider is the effect that we're having on miners. When you lower it 5%, 10%, miners are still okay. When you start to go to 15%, their existing equipment isn't going to generate the type of fiat revenue that they were expecting when they bought the equipment. And so there is some of the fairness issue in members of our ecosystem, like miners that have invested in Dash, and trying to consider them as one of the constituents that we're trying to serve with this change. A lot of those miners are significant holders of Dash as well. And so, they may benefit if we were to do something more aggressive, but many of our miners have invested in mining equipment with the intention of cashing out. And so, there's a lot of moving parts here. There's a lot of considerations that went into this. And I hope that these illustrations kind of help people understand that there are no free lunches here. We can do something more aggressive, but it has other types of consequences, either in future periods or to our miners or something else. And it doesn't necessarily deliver a hell of a lot more benefit as we do more and more.
Yeah, I mean, that makes sense. Now, when we're talking about circulating supply differences, one thing I noticed in the presentation, we're talking about what I one of the what I actually think is the dark horse of the whole idea, which is the flexible treasury that would be sort of reallocate that anything unspent would go to miners and masternodes. And on that question, though, now that you have a potential up to 10% of funds that can go to the treasury, up to an additional 10%. So from 10, a max of 10 to possibly a max of 20, which is, I think it's a great idea because of what it does for enabling people to actually spend money on what's needed and also to save in other times. However, that could potentially introduce a lot more, I guess, volatility into the circulating supply. Do you think that could be an issue where, say, people do a bunch of 20% proposal things and then all of a sudden there's more money being kicked out into the circulating supply than otherwise?
Well, if a large number of proposals, or a large value of proposals, I should say, are being approved by the masternodes, it would reduce masternode ROI. And if it were sustained over a long enough period of time, you can see how that could begin to affect the number of masternodes that are incentivized to operate on the network. Mm-hmm. They might be, if they see a lower ROI for a longer period, some of them may drop out. And so it is true that there could be some volatility that's introduced from that. The counter argument is that the proposals would only be approved in theory if the masternodes perceived that they're delivering a lot of value. Mm-hmm. If those proposals are delivering a lot of value to the network, that should have a supportive effect on the price. And so, if those proposals are, say, delivering a lot of new users, or delivering a lot of new functionality, or delivering a lot of things that investors find valuable, that should have some offsetting effect. And if they are worthless proposals, frankly, the masternodes should wise up and stop funding them.
Yeah.
And so I think that there is a valid argument there that there could be some volatility over long periods of time if masternodes continually fund the 20%. I don't think that's likely. And if it is, it should only be because those proposals are delivering a lot of value that exceed what the masternodes are giving up.
Yeah, and now in the case of, say, you have, let's just say that it goes down to 8 or 7% for a while because people realize that a lot of these proposals just aren't worth it, and they should be mostly just funding the core team and a couple other things. And then some heavy hitters show up. You have a few months at 20%. Do you think that could sort of throw off people's calculations of the profitability of being a masternode if they got it all mapped out and they're like, oh great, it's about reliably between 6 to 8% of the treasuries used. This is my ROI. And then all of a sudden you have big spending going on, and then they're like, oh, I didn't anticipate that at all.
Well, it's I mean, I have to say it is possible. I think we have to look at likelihoods, though. Are there wild changes today in the amount spent by masternodes? The answer is no. It's fairly consistent from month to month in terms of what they're willing to allocate. I think that ultimately this would put that power, or the decision would be in their power. There may be individual masternodes that don't see the value in some of the proposals that are being approved in such a scenario. And in that case, they may choose to exit their investment, and that's fine. But I think that the flexibility that provides, is beneficial. I think that the scenario that you're outlining would only be occurring again if there were value in the proposals being approved. And so presumably the value would accrue to the network in another way other than someone buying 1,000 Dash. And so I think the more flexible you make the system and create healthy trade-offs within it, the system is going to find the optimal use of those funds. If the optimal use of the funds is incentivizing masternode collateralization, great. If the ideal use of those funds is funding more proposals or better proposals or what have you, then great. The system has the flexibility to be able to do that.
Yeah. Now, another thing that you addressed was another thing that is kind of another elephant in the room of very low voter participation with Dash. Now, basically, this becomes a problem more than just there's not a lot of voter participation. If you start having proposals that are well received but not hitting that 10% minimum threshold, then so that means that even an overwhelmingly popular proposal would just not get funded, and then possibly nothing gets funded. Now, of course, of the two main solutions you showed, one of those would add a optional voter registration kind of a thing, where a masternode, when you create one, you get to decide if you want to vote or not, and then that would be a little. Then the 10% threshold would be of actual registered voters, not people running masternodes who, like a big exchange might not care. They might throw up a few masternodes. They might just be like, I don't care what happens. I trust the other votes. Now, what I had a thought of what if you put a small fee of some sort, whether it be like a one-time registration fee or whether it be just a very slight decrease in rewards when you run a masternode in order to be a voter. Do you think that would make it that you don't have people just saying, I'll register because I don't want to intentionally give up a power, and then they just never use it? They would get more only voter people. Do you think that's a good idea, or are there unintended consequences of that?
Well, there are parallels to that idea in the stock market where people own a share of a company. The voting shares typically carry a premium. You pay extra for the right to vote, and otherwise, equal shares, right? Like they have the same share of the company ownership, but certain shares carry voting rights with them, and people pay a premium for them. So this is not unheard of. I think that could be effective. It's another idea that we can throw into the pool. Certainly would like to get a lot more input from the community, both in terms of ideas like that one, and what are the attributes that they like, or what combination of things would they like. If we do an opt-in or opt-out scenario, like which of those two makes the most sense? Do we force people to register to vote? If they don't exercise that right after a certain period of time, do we remove them automatically? I think there's a lot of good potential ideas that could all come together to make up a solution. Ultimately, I think we can hold polls within the community. We can hold masternode votes within the community on what are the components that make the most sense. We could even use the tool that we use for conducting the polls for diff supervisors and trust protectors to collect information from the masternodes, in terms of how they would consider those options. So, I think that that's an excellent idea that should be thrown into the pot along with others. And I'd like to see some healthy debate around this and start to get a sense from the community, is this an issue? From everything I've seen, I think most people agree that it is. And if so, what should we do to change and improve the system? And I think we've seen a number of good ideas come to the table. So I think we'll come up with a solution. I think it's just very early stage at this point to know what that solution is going to look like.
Of course. Now, as far as the other way of potentially solving the 10% minimum problem, I think you mentioned it might have been Quantum Explorer came up with the idea of based on previous voting cycle participation, right? So if you have only, half the masternodes participating in the last cycle, then it would be more 10% of the votes that you expected last cycle. So do you have any concerns that something like that could lead itself to whale games and manipulation where people abstain from voting for a long time and then they just jump in and when now they're a huge piece of the potential pie, like they intentionally try to game the system like that?
Yeah, I mean, that is possible, and it's one of the downsides of an automatic adjusting system, something we would need to consider. I think that it would be almost impossible to prevent something like that because you can't definitively identify whether or not two masternodes are operated by the same person. So even if a flood of votes were to come in at one point in time, you wouldn't be able to point to it and say that's definitely a whale beyond any doubt. And so it's really tough to defend against something like that. On the other hand, it might be difficult to exploit. Let me give you an example. Mm-hmm. If someone puts up a 6-month proposal and you vote on that, you now have voted for the next 6 cycles. Mm-hmm. And so unless you're willing to take your masternode down and spin it back up under a new address or something like that as a totally new identity, mm-hmm. You wouldn't then be able to vote yet again or exclude yourself from the denominator in a scenario like that for quite some time. And there's always multi-month proposals going on. And so you'd really have to not vote for a long time before you could affect it. You can partially defend against this by now recounting them in the denominator. Mm-hmm. So if they have voted in any prior cycle or this cycle, mm-hmm. that's one way that you can partially defend against it. You include that number in the denominator. So, in the act of voting, they're increasing the requirement for the outcome of the vote. So I think there's a number of ways that we could kind of manage some of that risk, but you can't totally eliminate it in a scenario like that one. But there's pros and cons, right? With all of these solutions, there's pros and there's cons. And we have to decide what risks are we willing to live with, which of those pros and cons make the most sense. So it's a valid criticism of that idea. And I've had similar questions about it. So I think as long as the voter participation is high enough, that should be a difficult thing to exploit.
Yeah, now we now go to the ever-present question of trustless masternode shares, which has pretty much been around ever since, probably before, honestly, but ever since Evan started talking about savings accounts and evolution and stuff like that. And of course, as we already gone over before, there's a lot of unintended consequences with doing this kind of thing. For example, if you just have the collateral required for a masternode, then you have too many nodes, could cause some network problems. Or if you have people able to spin up a bunch of like collective sort of nodes, but then there's only a very few people operating the actual node itself, then that could be a centralization vector. All those kinds of things. However, it still seems like it's one of the most, every time I talk to people, it seems like it's the most demanded thing other than usernames is we want a way to make recurring income off of this stuff. And that was in the 2017 surge. You saw, a lot of masternode coins coming up and saying it's too late to get on Dash, but you can afford our masternode still. And then like the staking stuff became a huge thing. People flocked to trustless share options or trusted share options like Moo Cow Moo, which turned into a liability down the line. And basically it's the problem that just will not go away, especially since everything has staking, and people will, largely go to centralized exchanges, it seems, to get their recurring income, or a lot of times they'll just go to other coins. I know some Dash people, anecdotally, who are smaller holders who have moved some of their Dash into other coins that give them staking, even though Dash is their favorite. They just want those rewards coming in, especially in a trustless way. So what do you think? What do you think we can actually do about this thing?
Well, it certainly is possible to implement trustless masternode shares. As you pointed out, there are risks to it because it would allow an operator potentially in an anonymous way to be able to operate a large number of masternodes. And there would be really very limited ways to monitor that. And so I think that it would be difficult for us to kind of manage that risk. There's similar risks, by the way, of exchanges operating masternodes. If a large enough exchange held, more than 40% of all masternodes, they could potentially, if they wanted to, disrupt the network. I think that's unlikely, given we have a lot of very large exchanges, Kraken, Coinbase, Binance, Bitfinex. The chance that any one of those controls not just 40% of their market, but 40% of the masternodes in total, that's a really high bar. And so, I think that this type of staking is coming. If you look on Kraken's website, they've announced coming soon Dash staking on their staking page. I'm aware of a couple other exchanges that are planning on implementing this, major exchanges. And so the opportunity to earn rewards is going to be there. When you look at other services where the primary use case is, the other cryptocurrencies where the primary use case seems to be the ability to stake, most of the time people don't stake themselves. Look at Tezos, right? Mm-hmm. Most people simply park their coins on Coinbase or Binance or whatever and stake their coins there. So I think that the access is coming. We're working with some of the exchanges who plan to do this, so we're aware that they're working on it. So now the question becomes, well, what is the incremental benefit of being able to do this in a trustless way? There is some incremental benefit there. The question is, will it lead to a large surge in demand for Dash? I think there's two open questions there. One is, how many incremental people would be unwilling to stake Dash on an exchange, but willing to stake them through a more technical process that they would have to follow in order to do it themselves? And if they were to do that, if it does lead to new demand for that type of thing, what would be the effects on the number of masternodes operating on the network as a whole? One immediate effect would be, if there are more masternodes operating, that means each masternode gets paid less often. When masternodes get paid less often, there's less incentive to operate them, and you do have some drop-off that would occur on the other end of things, which is the whole masternodes. And so I think there would be some incremental benefit. It's really difficult to measure how much that would be. And so I think that we're aware of the progress being made with the exchanges to operate these shared nodes. Shared nodes are already available today through other services, and people participate in that. So I think we're moving up the ladder here to easier and easier solutions that are insured through exchanges, and so we're moving in a direction that will allow this to already be accessed by more and more people. And so as a solution to the problem that we're dealing with right now, which is this circulating supply growth problem, I think that on a relative basis, that's a lot more difficult to implement. And it's really difficult to measure how much of an effect, if anything, it would have. So I'm really focused on the problem at hand and solving that and doing it in a way that's as low risk as possible and as quickly as possible. And I think that that's why, we've gravitated toward the solution that we have in terms of our recommendation. Now, of course, this process isn't over. I hear people referring to the term of, you've come with a completed proposal and all this is done. I reiterate that this is part of the process. I am trying to gauge the response from the community. So far, it seems very positive. It seems like the majority of the community is like, yes, this makes sense to me. This seems like a solution. It's relatively simple and low risk to implement. I want to move forward with a vote. And if that's the case, we can move to a vote fairly quickly. But this is part of the discussion. I'm here having a discussion, looking for feedback on this, and some good questions are being asked. I hope I have good answers for them, for all of them, that put people at ease with this, because I've really gotten very comfortable with this solution. I believe in it, and I hope that others believe in it too. So, I think that we're going to continue to improve. It's not saying we're not going to do shared masternodes in the future. We may still pursue that. But I think that we've come up with something that will address the immediate problem, and we'll do it very quickly.
Yeah, and now there was a question about the process, which it kind of seems a little, it's slightly tangential, but I think it could be an important thing. Now that we've found a solution that seems to work pretty well, that most people seem to like, the question about the process was, are you open to a more collaborative method of identifying and solving issues? So, for example, it seems like from the outsider perspective that obviously people were worried about the price and things like that. And then you've identified that there's this circulating supply problem, and you've looked into solutions, and you've proposed one to the community at the end. And that's, I'm giving like a perception outline, not necessarily how it actually shook out. And then now people will vote on that. And so basically the question was kind of a concern of not participating with the community every step of the way. Like, for example, saying, hey, I think we might have a problem, and following the initial presentation, just saying, okay, I've learned this, I've learned that, here's the model I'm using, and so you guys can test out the model too and see what you come up with, and kind of having an open discussion thing rather than I'm going to surprise you guys with this cool solution at the end of the day. So that was kind of what the question is. I don't know what you think.
I think it's a fair criticism. I think that there's a balancing act here, right? I don't necessarily think that this is given the complexity of the problem and the complexity of the interrelationships between all of these elements, it's certainly not the type of problem that lends itself well to, crowdsourcing the analysis behind it. That said, we are an open source project, and these decisions need to be made in the open. I think that I tried to be transparent with my own thought processes along the way. I was certainly transparent about the issue. I got criticism back in December for raising it and raising alarms without having a solution.
You can't make everyone happy. You just can't.
Yeah, you can't make everyone happy. So, I entered this with the best of intentions, which is one, I identified an issue. I went to the team first and made sure I'm not crazy. And then I shared it publicly, and I said, look, we're gonna be working on this. We're gonna be exploring a range of solutions. I opened up the Dash forum for comments on each of the issues that were identified in order to get people's input, gauge from the community what they would support, what they wouldn't, things that were, frankly, illustrated that a lot of people didn't understand the problem fully, or were proposing solutions that would have other consequences that we didn't want to pursue. And I tried to answer those questions as best I could. I then went back and interfaced with the team. There were a lot of pretty heated types of interactions within the team about what was philosophically okay, what wasn't. And then on the Q4 review call, I shared some of the initial findings about some of these things. If you go back to that call, a lot of those same slides were shared all the way back then. From there, really, it was working with people I know that were economists or experienced with financial modeling and these types of things to really test out a variety of different scenarios, debate them. For that, I really interfaced with people that I knew were well educated on it, I trusted. And so I think that, I've tried to share my thinking along the way, include the community's input, and, share a proposed solution. And we're not done yet, as I said earlier. I think that if there's strong support for this and people are really convinced, then of course we'll move forward with it. If there are still tons of questions and the majority of the network is still on the fence about whether or not this is the right path, we'll continue to engage. I don't think you're ever going to have a solution that everyone buys into, understands fully, shares in the philosophy on, and so on. I don't think you're ever going to reach that point. But the question is, do we have strong enough consensus to move forward? And that's what I think we as a network need to aim for. The key word is consensus, not total agreement, right?
Yeah.
And so I think I went silent for a little while. I do have a lot of things on my plate, and this slipped out a lot longer than I would have liked it to. I would have liked to have been at the stage where we're at, probably early April at the very latest. And, you can blame me for that. I did take longer with it than I think was warranted. And so I hope the radio silence doesn't mean that people don't interpret that as I went away and did everything on my own. I think that there were a lot of people involved in this process, both inside and outside the team. I'm continuing to engage with people that are reaching out to me on Discord, answering questions. I'm doing this. I'm going to be doing AMAs next week. I'm going to hold another video session where people are free to just ask questions verbally to me. So we'll keep engaging, and yeah, I am trying to do this in a collaborative way. At the same time, there is working time. Someone has to go off and go build these models, go ask economists and other people who are experts at this type of thing to test the work and so on. And so there are times where we just have to go do work.
Yeah.
And the criticisms are valid, though. I certainly understand how those perceptions are there, and I'm doing my best to make sure to keep everybody involved.
So that's pretty much the end of the specific related to the tokenomics kind of discussion things. Now, there's a lot of stuff that was asked about kind of the root cause of everything. So the reduction in circulating supply. So the tokenomics shift was supposed to reduce the growth of the circulating supply, and the entire reason we're talking about that is poor market performance. Dash was the top 3 not too long ago, and now I think as of today is like 22 or something like that, which I'm sure a certain extent has a lot to do with the different exchange tokens and stable coins and other things cluttering up the top rankings, but nonetheless. So obviously it's good to address any problem that's actually identified. If this is actually suppressing the value in some way, it should be fixed. Now, is it possible that there's bigger things at foot that would be suppressing the value more than just the tokenomics? So, for example, one of the Dash's primary, I guess you would say, hype point for the longest time has been evolution, or the concept of crypto your grandma can use, of usernames and things like that. And understandably, it's a large task and it's taken a long time to do it. And obviously now Ethereum has the .eth usernames. Bitcoin SV has Paymail and Handcash handles. They're like user-readable names that they can transact between them. Now, of course, there are much more limited solutions, but they still have usernames out there. And then you have, of course, every coin is a staking coin today. Everyone can stake everywhere. And Dash was the one that compared itself to things like Bitcoin and Litecoin, that you can actually get returns on your savings. And now it seems like it could have fallen behind the pack with that as well. And tokens are another thing people really seem to care about. And of course, you have stuff like Ravencoin, stuff where you issue assets on the chain. And Bitcoin Cash, the SLP token system, seems to be a big selling point. In fact, when I chatted with Roger Ver in Switzerland, one of the things he was asking about Dash is, so does Dash have tokens yet? Can it do tokens? Because he's a serious Dash investor and was considering, I guess, expanding his stake. And that seems to be a big hang up. So is it possible or probable that more of Dash's market slippage has been because the product hasn't quite kept up with the competition?
Yeah, as I've said and tried to reiterate, I'm not claiming that this is the only cause of our market slippage. I do think that there are likely some compounding effects that result from a high inflation rate. If you have a high inflation rate, it can cause market underperformance. Market underperformance can cause market underperformance. Yeah. In other words, it can cause a loss of confidence. And so there can be a kind of snowball effect that can result. It is impossible to say how much is from the direct effects, how much is from the snowball effects from that, and how much is from other potential sources. Either more intense competition or our lack of delivery of these functions. And so I think that the answer is I acknowledge that there are other potential causes, and it's really difficult for me to answer the question, how much is coming from what? And so the answer is we're trying to address both of those things, right? Mm-hmm. And I know that there's also some interrelated issues here where the declining price has caused us to shrink the team by half, which has an effect on our ability to deliver. And so all of these things kind of interrelate to each other, and they can make the entire system less stable. So that's one of the reasons why I've prioritized doing this. I haven't done it in a way where it takes away from the other things that we're doing. The technical resources remain focused on the technical aspects, and the solution that I'm proposing would have minimal technical requirements in order to go implement. And so that was one of the considerations in coming up with a solution. So, isolating these two, as far as the delivery of usernames go, I really hope that the network recognizes the acceleration that we've had in our development efforts with a much smaller team, and that we are delivering today. We went through a period of time where, there were promises made back in 2016 before, there even was a Dash core group or even regularly paid team members. And the vision for that was one that, frankly, wouldn't have scaled. It wouldn't have scaled even with the users that we have today. And so, we went through a design process. It was the design that resulted was proved very difficult to implement. It's the reason we switched to Tendermint at the end of last year. And since we've switched to implementing the platform on Tendermint, we delivered the first version back in December that was functional, that you could run DashPay on. Since then, we've had releases almost every 6 weeks with major new functionality. And the pieces that we're working on now are components that are required for security, but all the functionality is there, including the credit system is in place at this point that would prevent spam and that type of thing. And so we've actually been able to demonstrate product through these demo videos, and people are free to download the software and use it themselves now to actually create usernames and so on. And so we're getting near the finish line at this point after a lot of false starts. And I think that we've done the things we've needed to do to correct for those things. And I think that there's been a lot of hard decisions made to abandon work that had been done in order to pursue something that was more practical and scalable. And so, I do think that that's impacted our price. We promised this a long time ago. And we're only now getting to the point where we're soon going to be going to testnet. So, I think that those are valid criticisms too. I do want to point to some of the successes that we've had too. On the business development side, we have really demonstrated that we can acquire a lot of users. And, when you look at metrics like the median transactions on the network each quarter, when you look at any type of usage statistic, wallet downloads, all of those things, we've been very successful at all of those things. We also came across an issue in end of 2018, beginning of 2019, where our hash rate was too concentrated. And we developed chain locks and chain lock based instance send that added new functionality to the network and also made the network more secure. That was unplanned work. It was something that we had to react to. But it nonetheless added tremendous value. And so there are some things that we've stumbled on and some things that we've really over-delivered on. And I think that, at this point, I think we've solved the problems that we've been facing on the delivery side. And we're delivering with a much smaller team at a much more rapid rate.
Yeah.
And so, anytime you build a new team, and are building something new with a new team, you can run into some difficulties. And I'm not going to shy away from the criticisms. I think that there's a lot of frustration, and I recognize that the frustration with getting a platform out the door is valid, and we're doing everything we can to address that.
Yeah, and that kind of folds into the greater market kind of thing, because obviously, in my many years following Dash very closely and being a big part of the community and things like that, I have not been unimpressed with the developmental progress. Much the opposite. It's been a lot of great things have been created. I'm sure Dash has changed the world in a lot of great ways. And I think that, like as you said, some things have been completely unsuspected and over-delivered on, and other things have been stumbled on. Do you think there's any validity to the idea that maybe the market was anticipating and pricing in the things that were stumbled on and just wasn't at all expecting huge gains in security and, the LMQ instant send, and then the legal structure is created, and all the other revolutionary stuff that Dash has done, that just the market wasn't thinking of Dash in those terms, so it didn't value those innovations. And then when the innovations it was expecting have taken longer, it's kind of punished Dash as a result. Do you think what do you think of that hypothesis?
Well, the market itself always confounds me. You know, when we announce, you know, something major and nothing happens, and at other times, you know, we announce something minor and there's a huge reaction to it. Mm-hmm. You know, a lot of people pointed to our success back in January as being tied in part to the announcement that Burger King would be accepting Dash in Venezuela. And, you know, I don't know if that's the case, but certainly a lot of press articles attributed a lot of the rise that occurred due to that. And it did generate quite a number of press articles. It seemed headline worthy.
That's very strange, because I'm pretty sure, based on the quality of a lot of these articles, I'm pretty sure someone had nothing to do. They were just refreshing CoinMarketCap, and then they just saw a blip, and they're like, oh, what happened with Dash? They start looking at Dash headlines. They see Dash and Burger King. Those are two huge word combos, and then it just goes from there. And you know, whether or not it was true, now it's baked in as the reason that Dash pumped.
Yeah. I mean, oftentimes the market is backward looking, trying to identify anything that might explain something that happened. But so, you know, at times it can be difficult to understand why things are correlated. You know, certainly it could be because we got our first version of platform onto a public network that people could go and play with and test, and that had to have indicated that we were making progress, significant progress, to be able to reach that point with a working solution that people could play with. So I think that you know, I think, and my belief is that if you keep your head down, deliver the things that you're supposed to deliver, and continue to gain adoption. The key is adoption in the long run. 5 years from now, which coins are going to be around? They're the ones that got adopted. And so those are the things that we're really focused on, is creating functionality that will lead to adoption, creating partnerships that are going to lead to adoption, focusing on markets that are going to lead to adoption. And I got to believe at some point that translates into value.
Yeah. Now, that is a partial concern, right? It seems like that's been the Dash way, and the Dash has sort of had this kind of go against the grain, underdog kind of approach of, we don't care about SegWit being popular today. We don't care if everyone's talking about Mimblewimble. We don't care if people are talking about sidechain, whatever the buzzword of the day is. We don't care. We know what we're trying to build. It's something we believe in. It's valuable, and we'll just deliver it, and it will show in time. Now, do you think there's a risk, though, of Dash taking longer to deliver things because they're being done the right way, and then the market not really appreciating the difference? So, for example, let's say Ethereum has usernames. You can still look up the transaction history behind those usernames. It's not like there's no real privacy involved. And then, so like, I don't know, I'm not technical enough to know the ins and outs of the Bitcoin SV implementation of usernames and stuff, but I'm sure that it's not done in as censorship resistant and decentralized a way as Dash usernames. Now, the thing is, will the market actually care at the end of the day? Will the market just be like, oh, Dash has usernames too, but they're way better, let's reward Dash for doing this? Or are they going to just say, yeah, so what, everyone has usernames these days, you don't get a bump? What do you think of that risk?
I know there's a lot of focus on usernames. Mm-hmm. That's one component of what platform is going to deliver. And we're delivering it as part of an integrated system. It's not that we're delivering usernames and then we're delivering something else and we're delivering something else. We're delivering a system that is username based and identity based and allows for functionality that these other solutions don't. I also want to recognize we can't be all things to all people. We can't have the best of everything. There are technical trade-offs, and you do have to focus limited resources on limited set of opportunities. And so we're focused on the components that we think are going to add the most value over the next couple of years, for example. And so I think that there are going to be projects out there that have the best X, and we may not be able to match that. And that's okay. I think that this is the nature of competition, and they won't have the best version of the things that we have. They already don't. And so we have to focus on what are our competitive strengths, what do we have today, what are the things that our network can incorporate and build and do it at scale, and how does all of that fit with the markets that we've managed to build up already. And so I think that, as we look across the space, it's okay that other projects are doing something that's successful. That's good for them. That's great for the overall crypto ecosystem and the asset class as a whole. We should be doing things that are going to help us be successful. And so, I think that the economics issue is an important one. I think that it can have these snowball effects that might have been affecting us. I certainly don't think we'd be as far down the market cap ranking if we'd had less than 20% growth in the circulating supply over the last couple of years. I think that's been a major headwind for us, and it's difficult to overcome a headwind like that. And so, there are some things that we've delivered that are incredible, like chain locks and instant send by default on all these things. We've managed to get that integrated into a number of major exchanges. There's just been a ton of success stories here too.
Yeah.
And so, pointing to every project and every success that they've had and saying which ones don't we have yet, I think that's that's going to put you down pretty quickly if that's the focus. And so, are there things we can improve? Are there things we can do better? Yes, absolutely. And we've captured a lot of improvement opportunities on the team in terms of our capability to deliver, and made a lot of improvements there. I hope that we get a lot of things off of our roadmap completed here in the next year.
Yeah, I mean, obviously that would be great. Now, I have heard some rumblings here and there, and of course, you don't know how serious it is, but it's always so good to keep into consideration about Dash's wildly innovative legal structures, the trust and the investment foundation, which seem to be great. I don't know if they've really had an impact on the price specifically. Do you think that there's a possibility that they could have been a sort of like a red herring or a distraction from focusing on better things, or have they been just like developed in parallel without using up many resources?
Well, the legal structure pieces are largely performed by outside firms. We put up separate proposals for those. They aren't expensive. They do take a long time to implement. There's simply a lot of research and process to them, and lawyers aren't devoted to Dash Core Group 100% of the time. So when you request something, they put it on their to-do list, and they'll get to it over the next couple of months as they chip away at filing forms and waiting for them to come back and things of that nature. So I don't think it's been a huge distraction for myself. And I have had help with it. Glenn Austin helps me a great deal with legal related tasks. But it's pretty much isolated to the two of us and maybe a couple other people like Fernando that help out from time to time. But mostly those are things that are slow burns and have more to do with expense than they do have to do with the time required of the team in order to really perform those types of things. I agree that they don't have a huge impact on market cap, at least not directly, right? Like
Or
people
especially
might look at
not
them
yet.
and they're cool. Yeah, not yet. I would circle back to the reasons we put them in place in the first place. With Dash Core Group, that was the first one, the trust that we put in place. The intent behind that was to allow us to be able to build up a war chest. And at the time that we implemented it in 2017, that certainly was looking very possible. And so we were uncomfortable requesting more from the network than we needed that month because it was unclear who would own that, right? And we didn't want to simply create a regular corporation that, say, I owned. That didn't make any sense because I'm not here to profit off of the network. And so this was a legal structure that was meant to outlive an individual. It was meant to serve the network and at the same time allow it to build up that war chest. Now, if we have another bull run like we did in 2017, we're going to be able to build up that war chest. We're going to be able to secure Dash Core Group's funding for a long period of time if the network deems that that's a good use of funds. So that if there is a downturn in the price, we're not forced to immediately start laying people off like we had to in 2018. And so, I think that that's healthy for the network. The benefit will come in future periods because we really never got to the point where we were able to build up a large reserve. And just because of the timing of it, the trust got put in place. We got the paperwork back in January of 2018, and every proposal we put up in the spring of 2018, by the time it paid out, was much lower than we thought it was when we put it up to the network. And so, we kind of faced this problem where the price was going down, and then by mid 2017, we were starting to face those layoffs, and so we never got the chance to kind of build up that war chest. In terms of the DIF, the Dash Investment Foundation, they have now built up a considerable amount of assets at this point. They could start making their first investments, but it certainly has been a slower start than when we put that proposal up to the network in the spring of 2018. We thought that they would be able to build up resources more quickly. But I think that once again, I think the real benefit to them will come if we have another bull run where they'll be able to build up those assets and be able to start making investments on behalf of the network at a more rapid rate than kind of currently they're probably restricted to 1 or 2 a year. So I think those periods will come. You can't keep growing your user base the way that we have forever without having that start to accrue. And I do think that the changes that we're proposing here would be beneficial to our price. And so I'm really hopeful that both of those legal structures will start to yield some of the benefit that we envisioned for them. I mean, I don't want to discount them. I think that Dash Core Group, we do have reserves, and we've had reserves at points that have seen us through some tough times. This last December when the price was quite low, we were able to withstand that really well thanks to this structure. So I think that it does yield benefits already. We wouldn't be where we are today without the legal structure that we put in place. But the real big benefit will come when we experience a bull run.
Yeah, and that seems to be a constant theme in Dash's evolution. Is it seems like Dash is fixing all the problems that aren't really a problem at the moment they're fixed, and gets assailed with others. So, like for example, chain locks. Why Bitcoin Cash or SV have not had a 51% attack when it should be laughably easy for any single Bitcoin miner to do that, I have no idea. Why there's merchant adoption of Bitcoin Cash that accepts zero confirmation transactions, just it's going to work. and then like the demand for instant send isn't quite there. Like that's another thing that Dash is way ahead of the curve on, but no one really cares yet. And so it's going to be interesting to see if stuff catches up, if eventually everything, people do start getting 51% attacked. We do have centralization problems on other networks and without the legal things like, and then if you do have, the merchant, like now no one wants to wait for confirmation. So any merchant adoption kind of dries up on any other chain that's not Dash. It will be interesting to see how that whole thing plays out.
Well, foundational elements are really important. I believe that you need to look ahead to the problems that these networks will face and solve those issues. The proposal system was an incredible innovation that Evan put forward. The masternode system was an incredible innovation that he put forward in incentivizing the running of nodes. The solutions that resulted from those foundational elements are incredible. The legal structure that we put in place, I think, are incredibly important for a sustainable, support for the coin going forward. In a way where we're not profiting off of it. We're here as a servant to the network or a contractor to the network, and at the network's bidding, if you will. And all of these things I think are really important, and they answer questions about sustainability that I don't think other coins have necessarily answered. And so we're playing the long game for sure. And when you look at the metrics, we're doing pretty well at it. Like the adoption is happening very consistently on our network. And I believe that the approach that we're following is the right one. I believe that Dash is going to be one of those coins that is around, much further down the road than a lot of these coins that are likely to kind of fade away when interest fades away.
Yeah, and that whole economic transaction thing is pretty interesting. And of course, I'll be trying to do some. I was talking with Darren the other day about numbers and stats and stuff. And so on the day I analyze it, Bitcoin Cash and Dash had about the same number of transactions that day, about 40,000. And for Dash, the median value was somewhere around $10. So that's the median value, meaning that 20,000 transactions were worth at least $10, $10 and above. And then the other was, $10 and below. Mm-hmm. And that is relatively what I could call indicative of real use, that there's a lot of people buying things with it. Now, or at least there's a certain amount, at least 20,000, right? And then at the same time, the Bitcoin Cash median transaction value was, I believe, sub-cent at 40 at the exact same amount of transactions. So that means at least 20,000 were definitely not for purchases, unless they were micro payments for casino games or something like that, but probably not. It was like, so yeah, the evidence of Dash adoption is very hard to kind of carve out. It's happening. The evidence is hard to it's more advanced than most people would see, which was why, so you have Bitcoin SV with 600,000 plus transactions every single day, which are 99% like bot kind of traffic bot, and posting stuff on a Twitter thing, and or time stamping weather things. It just like kind of spam-ish transactions that be argued is real use, but it's not the same level of real use.
That's not adoption. That is a single bot or a single application that's leveraging it. That's one user. Mm-hmm. So I agree. I don't think that that's the same thing as adoption.
Yeah.
We talk with some of our partners like eGifter. Mm-hmm. I was speaking with the CEO of eGifter earlier this morning, and they were seeing 100,000 transactions a month, or 100,000 in transactions a month. Mm-hmm. Excuse me, $100,000 worth of transactions a month on their platform with Dash. And people are using it in a unique way. They're actually more likely to make their purchases live as they're about to use them because of the speed. Yeah, so they see more of the exact amounts or more of the types of things that are cashed in right away, like gaming cards, right?
Mm-hmm.
People tend to buy a gaming card because they need it and they're going to go buy something with it immediately. He indicated that the users tend to be younger. And we see this in platform across platforms that we speak to. They all say, well, Dash is either right there with Bitcoin in terms of users, or it's very close. It's in the top 2 or 3.
Mm-hmm.
It's very popular for actually using.
Mm-hmm.
And if not for using, what is cryptocurrency for? We're all here to try and see this great technology be adopted and used in the real world. And
sir,
so,
have you forgotten moons and Lambos?
Yeah, exactly. Number goes up only works for so long. And, I think that we're here to create something sustainable. And that is my answer to all the people who are asking this question. Can't we just spike the price with like a dramatic shift from the miners to the masternodes and just do this huge moon landing?
Mm-hmm.
And the answer is, well, sure. In the process, we'd create the world's largest game of chicken where, existing holders are likely to see it go up, up, up and know that it's going to crash at the end of that. We're not here to play casino games. We're not here to play a game of chicken. We're here to create something sustainable. And that is the reason why we're putting forward the proposal we are, is because we're trying to manage that in a very responsible way, in a way that won't lead to another problem down the road, but solves it once and for all and allows us to focus on the things that we need to focus on, which is adoption and creating a great user experience. And I think that what we're putting forward, circling this back to the earlier conversation, this is the theme here. We're creating something real. And we're looking for people who are along for that ride, that want to create a real, sustainable, long-term growth. And this is the way that cryptocurrency is going to have an impact on the world.
Absolutely. Regarding that, of creating usable things, one of the weird dark horses to come out this year was Dash Electrum with private send. From my own personal perspective, of course, I love using private send. I do use the core wallet usually, but having a light wallet, especially a mobile wallet version, was just good because there's been several times I've crashed the computer by opening too many tabs while I'm mixing on the other side, and that didn't happen with Electrum. One thing I noticed about
you need better computers.
Yeah, I just have this laptop here and I abuse it, but there was a acquaintance of mine who is a big Bitcoin Cash guy just because he's a crypto user, and that's just like what works. And he kind of didn't know too much about Dash. I introduced him to it. He's been mixing an Electron Cash, the Electrum thing that for Bitcoin Cash that does like the very basic like one round mixing kind of thing. And he basically was like, I'm not going to use the core wallet. I'm not going to download it. It's not going to work. And then as soon as Electrum started working, he started mixing on that one. And then he discovered Bitrefill and was like, oh, this is awesome. I get it right away. This is fantastic. So Electrum, and I've actually noticed that Electrum has increased the private send mixing and transaction statistics. I can actually see it based on like the last few months. There's been an uptick now that this has been easy. And of course, Electrum is not a core project. It's another developmental project that obviously has created a lot of value for Dash. And so here it goes into like, I have like a wish list, right, of things that me as a user, again, I'm probably outside in the first world, I'm probably the #1 power user of Dash. If you think about it, as far as like there's people.
I don't doubt that.
Yes. And so as like user #1 sort of thing, which, sounds like a sci-fi movie, but one thing that I would absolutely love to have is some kind of an app that would facilitate this whole trustless masternode scheme. Now, I've spoken with a few developers about how this could possibly work, about creating like a multi-sig type wallet, kind of like a copay type thing, and you use that to assemble, all the masternode collaterals into into one single address, and you sign but do not broadcast a refund transaction that sends everyone back their money. So if one person presses the button, it's the eject seat, so you don't have to trust someone with the funds. And then of course you could just pick a provider, either like say CrowdNode. Now CrowdNode is a great option. The problem is a lot of people don't want to trust their money just giving it to another company and risk the Bukamu situation kind of thing. A lot of people want no KYC, which is, be your own bank. The whole, in some parts of the world, it's not even more possible. And of course, they want to be able to maintain some kind of control over their funds. And so basically, first off, what do you think of the feasibility of something like this? And also, it doesn't have to be developed by the core team, but what would you think of the feasibility of something that would let someone who's an advanced user but not a programmer, such as myself, who would want to aggregate semi-trustlessly a piece of a masternode and start doing that?
I think that would be pretty cool. I think that the more options that are out there, the better. Mm-hmm. That isn't going to appeal to everyone. As you said, you're a power user. It takes a certain skill set to be able to do something like that, or a certain willingness to learn it, certainly. Other users are not going to want to invest that kind of time in understanding it, and would be perfectly fine with the risks associated with letting Kraken operate a shared masternode on their behalf, and have Kraken take a fee for doing that.
Yeah.
Or a portion of the reward. And so I think I would encourage as many options as possible of this type of thing. I do want to have shared masternodes within the protocol itself. And it takes resources from the team to be able to do it. And so we're going to have to prioritize it in some future roadmap.
Yeah.
If we were to pivot and focus on that right now, I think it would be the wrong thing. But there's nothing stopping other developers, by the way, from pursuing something like this, and or even suggesting changes to the core protocol itself that we can merge in. So if this is something that people want, and there are developers out there that are wanting to work on something like that, there's nothing stopping them. This is an open source project. And we have had pull requests from people outside Dash Core Group. They're rare, but we do see them. And as long as the improvements are there, the security is there, we're not compromising the security of the network, and there's value, there's no reason why we wouldn't want to pull something like that in.
Yeah, now it's a slightly different wishlisty thing because of, obviously, there's been a lot of regulation nonsense. And I actually had to deal with some guy on Twitter the other day saying that, Dash is not going to work out because it's just the privacy stuff. It's never going to be on exchanges and stuff. And I was trying to have that conversation of like, you could do the same with other coins. There's, and it just wasn't being comprehended. But basically, mixing in the core wallet is great. Mixing in Electrum is great. What I'd really like to do, I really like the Dash mobile wallet today, like the official Android, or I guess it's a unified design now, but the official wallet, it looks really cool. I'm always showing it off to people about, look how easy it is to use. Look, you just do this and that. And when I showed the Uphold integration on of course, Fernando had helped me out with that, but on a video, it just surprised like how easy it is to just do all this on this. And I would like to just not have to switch wallets when I use private send. Now, what do you think is obviously it's not a priority right now in terms of man hours kind of thing, but as far as, is there an issue getting it integrated into the official mobile wallets from a perspective or regulatory kind of an issue?
The regulatory issues that we face are perception ones. They're not reality.
Yeah.
But sometimes perception is all that matters. I'll give you an example.
Yeah.
An exchange that recognizes that private send is CoinJoin. CoinJoin is a privacy-enhancing technique that can be done on any public blockchain. It's done on Bitcoin. They understand all of this. And they're pursuing a license to operate in a certain country. They can pursue that license with a list of coins like Bitcoin and Litecoin as part of their initial license request, or they can do it with Bitcoin, Litecoin, and Dash. And the perception issue is we'll face tougher scrutiny if we include Dash in that list. And it's a valid concern because perception is all that matters in a situation like that. That could slow down their license, even if they're right. And so what we oftentimes face is, well, we're going to get our license first, and then we'll integrate Dash and go back to the regulator and request to add it. And we win all of those, right? Like, we're able to support them and we're able to get them through, but they're looking for speed, they're looking for efficiency, and the perception surrounding Dash is one that causes that to slow down. What we're trying to do now is directly interface with regulators to address the perception issues up front. And we're seeing a good deal of success, but that is an education process. We do have allies in that process, both exchanges and AML providers and so on that are working with us. Kind of, I would say mid 2018, late 2018, we were dealing with the perception that Dash could be a security. And so we pursued some legal work there to address the SEC's concerns and so on. By early 2019, I couldn't get the SEC to return our phone calls or emails for months. So, like, you know, we address these concerns and they go away, and then now the private send issue kind of came to the fore when the Financial Action Task Force, or FATF, came out with the travel rule last year. So all of a sudden we're grappling with that. We actually got delisted from a couple exchanges. We had to go back, educate them, got relisted, and had to interface with the regulators. Now we're approaching the implementation FATF travel rule here this year, and we're really having to do a lot of support work. But ultimately, this is an issue that we're going to prevail on. And I think once the regulators are, over time, the regulators are getting far more familiar with Dash, how it works, how it's different from a coin tumbling service on Bitcoin and so on. And we are reaching the point where they're viewing us as having parity with Bitcoin in terms of risk and so on. I'm really proud of the implementation of CoinJoin that we've done. I think that it is a state-of-the-art implementation that a lot of other coins can't match because of the denominated amounts and all kinds of other things that we've done really well. The usability of the solution, et cetera. But none of those are legally defining differentiators, right?
Of course.
Like, and so we have gone through this education process. I think we're getting to the point where this is becoming less of an issue. And from a regulatory standpoint, I hope to reach the point where adding it to more wallets wouldn't cause any type of backlash. I don't think it would today. I think we'd be okay. And that isn't the reason we've held back from adding it to the mobile wallet. It's been, you know, just a resource issue and a prioritization issue. We're going to add it to the mobile wallet.
Nice.
We're going to add it to the mobile wallet. We're probably going to have to do a lot of support for exchanges and regulators and things like that at that point in time that we do it, just to continue to chip away at these perception issues, and we'll get there. Yes, the answer is we're going to do it. And we're working really hard on a variety of related issues to make sure that when we're able to, from a technical standpoint, it's not because of regulators.
Yeah. And I mean, that's really when you talk about competitive advantage and things, where I think you could have a dream payment product where you have a actual good UX wallet that can send and receive to human readable usernames. The funds can be private. Of course, the usernames are private, and it's instant and just fast, cheap, secure. And then nothing can touch the Dash payment experience at that point. Already, there's not really much competition, but at that point, it's like a miles different from everything else, and then everything else looks like terrible by comparison. It's like an old power steering-less stick shift pickup versus a modern Tesla. It's like at that point, it's just like, wow, that's just a huge difference. Now,
that's what we're working towards and have been for a long time, and we'll continue to iterate on the product even after that, right? I mean, we'll keep adding new functionality, and we'll add a rewards program, or like we'll continue to make the experience better and better and better with new products and solutions and ways of interacting with the network, and I think that those things continue to accrue to the network over time, and once you build them, they don't go away.
Yeah. Now, as far as building, so the last quick little bit on all that, what would you like to see built that is maybe not in the roadmap in the short term, is not in the roadmap at all? Maybe it's outside of DCG scope, maybe. But like, what's like a dream thing that you would like really like to see made that you sort of put out there? Maybe someone's like, "Oh, that's a great idea. I'll start working on building that."
Probably the most difficult aspect of using Dash today is locating the merchants that use it or that accept it, and getting a good idea of what the experience is like before you drive halfway across town to go use your favorite cryptocurrency, right? I think that I would like to see an app built on the blockchain, on platform, that allows for merchants to be added by anyone who discovers that there's a place that accepts Dash, and allows for rating of that establishment over time. It could track, for example, the activity at that merchant and take them off if there isn't activity for a long period of time, or rate them lower. Some type of application that helps with the discoverability of using Dash. I think that would be hugely helpful to the network. And I think Discover Dash was a good step in the right direction. But to actually build it on platform and have it update in real time based on network activity and so on, that would be incredible. I think it would really improve the experience of using Dash for your average user. I'd like to see an auction site built on platform that allows people to post things for sale and purchase them. That'd be great, because I can now, in a sense, earn Dash just by selling stuff online. I can also ensure that this is going back into the ecosystem with another user who's Dash oriented, as opposed to buying a gift card and Dash exits our system. I'd like to see a freelancer app. I'd like to see the ability for people to say, hey, I do web development or something like that, and I'm looking to get hired, and I take Dash. And have that be an application that people can use. I've talked about an invoicing app in the past, an app that businesses can issue invoices on platform. I'd like to see an app that tracks the governance results, so that it basically allows masternodes to store the state that they saw at the vote deadline when it occurred. And so you could actually track all of that data and analyze it. I think there's just a ton of things that could be built. Developer tools like we've got for Ethereum. They've got a Truffle suite of tools. These are all ideas that the team has kind of
thrown out.
Said, gee, wouldn't it be great for, the product guys? I was talking with Dana and Brian earlier today on what would you like to see? And these were some of their ideas and things that they've seen. And so I think there's just tons of ideas out there. There's more ideas than there is capacity to go implement them. And, I'd love, I think when we open this up and make the platform available for developers to just start building whatever they can dream up, I think we'll see a much more vibrant ecosystem that results in a much better experience for our users overall.
So first off, just as a random thought, so if you had the merchant DApp, right, and you got people, how possible would it be to start aggregating a ton of data about actual real use without compromising privacy in this way? It's like, for example, how many merchants got visited by a person? And so you could just say that 5,000 people around the world went to a merchant with a Dash merchant today. Or you could just say, you could start pulling transaction statistics through a platform point of sale that wouldn't at the same time compromise their own thing. Just not for the individual merchant, but it would be maybe through a zero knowledge proof kind of thing. It could be, it could just...
With the initial version, you wouldn't be able to see information like that. But if we had a unique version that was for merchants and a unique version for users, which seems like the direction that we would head, you could put a flag within every transaction that simply identifies, assuming both parties agree to participate in something like this, perhaps, that flags, this is a consumer to merchant payment.
Yeah.
Or this is a merchant to merchant payment or a business to business payment. You could start to extract some basic information like that through either an opt-in or opt-out process that would allow for that information to be captured. It's a good question. I mean, we obviously really value being able to get data from some of our partners on how often Dash is used, what type of purchases is it used for, like the conversation that I had this morning with eGifter. They're actually going to provide a portal for us to be able to go in and kind of view the data real time. And as we get that data, it's feedback for our business development team to go out and focus on the areas where we're getting traction. What type of promotions are effective? All of these types of things are really valuable information. We're also a privacy-oriented coin.
Yeah.
So, I think that there are limits to what we can reasonably expect, at least without providing tools to opt into these things or something of that nature, without, compromising the user experience of privacy. So,
yeah, on those lists of apps and things like that, that just reminds me, one of these, this thing is streaming obviously to YouTube primarily, but also to Twitter and Facebook and DLive. But I'm also streaming to something called Flote, Flote, which is a social network that basically allows you to have a crypto Patreon to where you subscribe and you get someone who'll pay you $5 a month in Bitcoin or whatever. And I got a super chat, which is like a highlighted chat that you pay people to get. That would say, I would like Dash on Flote. And it's funny because it was like a $2 in Bitcoin message that someone paid to send on this podcast right now. And it's probably going to be significantly less than $2 once I move it because it's BTC. So would love Dash on Flote. Yes, I agree. Now, that's going to be a thing that's, I'll probably even take a completely separate clip edited of all the things you want to have on platform and stuff, and just make that a separate video and put that up and just kind of do a call out for people to start developing. How much of this stuff can you actually start working on today? As far as, obviously platform's not on mainnet, but as far as could someone start building all these things today, or do they have to kind of wait until another testnet release or something?
There is a developer Discord that has been set up, so that the developers have their own space to go and communicate with each other without the noise about markets and the noise about adoption and all of these other things, and really focus on the tech piece of platform. And there is a growing community there of developers that are interested in developing apps. We did open up, I think it was in March or April. I think we opened up platform for applications other than DashPay. The version that launched back in December was heavily locked down. It was strictly for DashPay. We've since opened it up for several months now, and we do have active development taking place with ideas that developers have. So yes, they can go work on this stuff today and get help. There's active channels there where they can ask questions and get oriented and almost get a tutorial from some of the other members on how to get started. So you can begin developing apps now for when platform launches. And it'd be great if we get more development happening. It also helps with feedback because they're actively testing the system and they're identifying issues and helping us to resolve those and help us to understand the severity of bugs that are identified and so on. So there's been some great feedback from that development group.
Yeah, so that's basically a great place to just start funneling everyone who'd be interested in this kind of stuff.
Yeah, and Andy Freer is in there, and he's got a little bit of a bounty program going to help people with their ideas and help incentivize some of the he calls it an incubator, and so it's a great idea. It's a great way to get people involved, and hopefully that community continues growing because it's those applications that we're hoping as Dash Core Group that we get out of platform. Otherwise, we'd have to develop all of these things ourselves, and that really is limiting.
Never ending.
Yeah, and we don't have all of the perfect ideas. There are great ideas all over the place. So I'd love to see more and more applications getting developed over there.
Of course, we just had a comment of bounties in general should be way more common in Dash. And I mean that's pretty astute. It'd be great to just have a few different teams running little war chests to throw out bounties if someone developed this or that, like the wish list, rather than as I raved about Electrum finally working and having a great private send ability. They still had to go become a recognized team, go to the treasury, and just do this. Become like an alternative but very narrowly focused development team and just keep getting proposals through and deal with that whole Thunderdome over there. And that it would be great for developers like that to not have to always do that. But yeah, I'm sure some of that's beyond the scope of the core team, but maybe once you guys get get a rehiring everyone back phase and then start to build a little war chest, you can just say, hey, you know what? We have no time to do a accurately ported private send element for the mobile wallet. Does someone else want to do it? Any takers? 100 any takers? And just there you go. And he starts getting built.
Yeah, I mean, I would love to be able to fund a bounty program or an outsourcing program of some type that would allow us to do that. Our own reserves versus our run rate is about as healthy as it's been since the trust was set up, and it's taken a while to get there. And I'm hoping that we can start to, for a change, be able to support more activity rather than less, and we have to be in a healthy financial position to be able to do that and make commitments to people to bring them on board and things of that nature. Bounties are one of the ways that we're considering I actually had a conversation with Bob earlier today where we're considering what types of things might we be able to throw out to the community. So hopefully we're able to make some requests in the near future that people can go pull off the shelf and attempt to implement.
Yeah, well, I think that brings us to the end of this quite lengthy chat. Sorry for dragging on to almost 2 hours, but I don't think there was much fat on this.
Yeah, I think if I were you, when I post this, I would advise people to watch it at 1.5 speed or something to
which is
try to manage their time.
Yeah, or just have it in the background for like a long time. But thanks everyone for watching, and thanks Ryan for popping on. If you're watching this at all, make sure to subscribe to whichever channel. YouTube's usually the best one, Digital Cash Network on YouTube. It's the best for the streaming thing. I have my link tree with crypto donation addresses, of course. 99% of everything I guess in Dash right down there, cointr.ee/the Desert Lakes. Throw me a couple bucks if you feel like it, or a couple duffs if you feel like if you feel like you enjoyed this. And I will, in the description here, because it's relevant, post the developer Discord link so people can go start joining that. And now it's time for this wonderful moment called the after party, which is basically a conversation like this, except more than just two people, less formal, as many people as you want, not recorded, so don't worry, up until like the late hours of the night sometimes. And basically the way you go there, you got to get to the Dash Talk Discord, which is like the main conversational community, whatever Discord. You go to, I'm going to type it in this live chat live, staydashy.com. That link gets you right in there, and then you just start asking around, or you can ping me and say, hey, I want into the after party. Where's the after party at? So, yeah, thanks again, Ryan, and thanks everyone. And yeah, we'll see you in a couple weeks.
All right.